Hello everyone, welcome to Demand Supply Trading Live Practical Session number 6 for the year 2026. Myself Srijit Kakkar, and today is Friday 20th of Feb 2026. Now generally I do the sessions on Sunday, but again the coming Sunday I'm not available. The same thing happened the last Sunday as well, but I didn't get the time to reschedule the session. But today I did have the time to at least do the session on Friday, because again tomorrow and on Sunday I'm not available. So I thought instead of again skipping a week, why not do the session today itself, so that you people don't miss on these sessions. All right, now before we get started with today's session, let's get done with the disclosure. So I'll keep it on the screen for a few seconds. Make sure you people go through the disclosure and understand it clearly. So I'll keep it for a few seconds, and then we have another page as well. And yes, you can always pause and you can go through the disclosure if you need to. All right, so now that we are done with the disclosure, let's talk about our Telegram channel. So we do have a Telegram channel on TradingView where we keep updating you regarding the schedule of these live sessions. Like today, we rescheduled the session from Sunday to today, and it was already posted on the channel early in the morning. So that is how you'll get the update when these sessions are happening. Plus, we also keep posting content related to demand supply trading methodology. So that is where you'll also get the updates about these sessions, plus content, like I said, related to demand supply trading methodology. Now, how can you join this channel? There are a few different ways you can do. With the first page, you can scan the QR code which is on your screen. Second, if you go to the description of this video, you'll be able to find the direct link. You can click on that link and you can join this Telegram channel. And thirdly, when you visit our website, which is srijitkakkar.com, or you can use the short URL that is sk.coach. So once you're on our website, you can just scroll down on any of the pages to the footer section, and in the footer section you'll find this banner which says join Telegram channel, and in front of it you have this join now button. You can click on this button and you can be part of our Telegram channel, right? So these are a few different ways how you can join the Telegram channel and always be updated. Next, today's session is all about practical application of demand supply trading methodology. So our demand supply course is now available as a 100% free course. Now, how can you access the course? We'll talk about it as we move forward in the session. But once you go through the course, you basically learn the methodology theoretically. And to have a better understanding how to use the methodology, definitely you need to look at some practical examples. And that is what we do in these sessions. So almost every other weekend, I do a practical session where we apply whatever you learned theoretically to some live practical examples so that you can understand how to plan trades very mechanically and rule-based using demand supply. Now, the best part about these sessions, in fact, there are two advantages of these sessions. Let's talk about both of them one by one. The very first one is when we'll go through these examples, you will see that in my sessions, we are not analyzing something which has already happened. We are always planning for the future. And that is how I'll say my sessions are very, very different from most of the sessions which you'll see on YouTube. So most of the sessions, what people they generally do is a move which has already happened. They'll apply some indicator oscillators, and then they'll talk about why they could have participated at that particular level and be a part of that move. But in my sessions, we are always analyzing in advance, which means you also don't know what is going to happen in the future. I also don't know what is going to happen in the future. So we are always pre-planning. And eventually when the prices, they reach those areas of demand and supply, that time we also review them. So what happens is, because you're looking at both the before as well as the after, nothing can be more transparent than this, and that also helps you build confidence in the methodology, right? So that is how these practical sessions are very, very different. We are not reviewing something which has already happened. We are always planning for the future. And the second advantage is that because these sessions are live sessions, I also take your questions and queries. So whatever questions, queries you have related to trading in general or to demand supply trading methodology, you can always put it in the chat box. And at the end of the session, I take your questions, queries, and I try to answer all the questions, queries that I get. Now, to be comfortable with these sessions, there are a few prerequisites. Let's talk about these prerequisites. The first one is the Trading Essentials course, optional for someone who already has a very good trading background. But I would highly recommend, irrespective from what background you're coming from, you should always start with the Trading Essentials course. It's a 100% free course. Now, how do you access the course? Very simple. Once you visit our website, you will see under services, you have the option for courses. And you can see the very first one is Trading Essentials. The course is available in 2 languages, English and Hindi. So whatever language you're comfortable with, click on that button and you'll get immediate access to the course content. No sign up required, no registration required. Clicking on the button and you have immediate access to the course content. Now, once you are done with the trading essentials, the next step is your demand supply trading course. Now, how do you access demand supply trading course? Exactly the same steps. You'll go to services. Under services, you'll go to courses, and you can see the next one is the demand supply trading course. This is also available in 2 languages, English, Hindi. Again, no sign up required, no registration required. As soon as you click on this button, you get immediate access to the course content. Now, once you're done with the course, like I said, you will be learning the methodology theoretically. Now, if you want to look at some practical examples, you can always click on practical sessions, and this will help you get access to the recordings of the previous session, right? So I do live sessions, like I said, almost every other weekend, but these sessions are also recorded, and currently the archive is over 2 years of recordings which are available to you. So if you want to go through a number of practical sessions, you can watch the past sessions. Again, these sessions are also available in 2 languages, English, Hindi, whatever language you're comfortable with. No sign up required, no registration required. You simply click on this button, you get immediate access to the recordings of the previous session. All right, so that covers the first 2 prerequisites. Now, what you'll also see during these practical sessions is that I use 2 documents. The first one is the rulebook and the other one is the flow chart. And these 2 documents, they help us plan trades very mechanically and rule-based. Now, how can you download these documents? Very simple. Once you're on our website, under services, you can see you have the option for downloads. And here you can see the first one is the rulebook. You can click on download, and the next one is the flow chart. So that's your rulebook. Now, like I said, during the live practical session, you will understand how to use this rulebook, and that's your flow chart. So these are the 2 documents which can be downloaded from our website. Again, even for downloading, no sign up, no registration required. You just click on the download button and you'll be able to download the documents. Now, before we start with today's analysis, we do have 2 trades. One trade which was getting carried forward, and another trade which got triggered during the week. So let's review those 2 trades, and then we'll start with our analysis for today. So the very first one is, just give me a second. Let me lower the volume first, and let me also change the symbol. We'll start with the one which was getting carried forward for review, then we'll look at the other one. So just give me a minute. All right, so this is the first one. We also reviewed it the last session, and the analysis was done on the 3rd of May 2025, and the prices came into the zone on 21st of January 2026. So you can see somewhere around here we came into the zone, and we have reviewed it in the past as well. You can see prices have just been hovering around near our zone. We haven't got the opportunity to make it as a break-even trade or to trail onto it, so this will still remain as an open trade. We'll track it for the next few sessions and see how this one works out. So again, session number 18 from 2025, still an open trade for us. So we will continue to review it unless and until we get an exit from this. And just give me a minute. Let me bring up the example, the other trade example which got triggered. So this is from session number 5 for the year 2026. I did the analysis on the 8th of Feb. So 8th of Feb was somewhere around here, right? So when we did the analysis, the chart was something like this. So if you'll go back, you watch the previous recording, because today's session number 6, this was the previous session, which is session number 5. So when we did the analysis, the chart was something like this, and this was a type 1 trade for us. So what happened, you can see on this particular day, prices, they just crashed like crazy. So you can see in just one single day, from the high to the low, we dropped around 9.5%, 9.25%. So again, if you think about it, most of the people, when they'll see the prices crashing like anything, they will be scared to press the buy button. And I know this is the biggest challenge with demand supply trading, which you will initially face, that when you'll see such big drops, you might be more comfortable selling, but it will be a very difficult decision for you to press the buy button. But that is what we are supposed to do, because if you think about it, in just one single day, now you're getting the stock almost at a 9.25% discount, right? It's almost like let's say your most favorite gadget, right? Let's assume the very next day it's on a 10% discount. Definitely you'll be more inclined and towards buying it. So the same thing is happening on the charts now. You can see we were getting almost a 9.25% discount in one single day. We were inside of our demand area. That is where we had the opportunity to go long. Now, if you would have gone long, you can see in just 1, 2, 3, 4, 5 days, you could have easily got a 2:1. So if you're somebody who's only interested in a 2:1, so in 1, 2, 3, 4, 5th day, you get a 2:1. So again, if you think about it the other way around, now from this area, to this, you can see you at your 2:1, you would have got around 7% return in just about 5 days, right? But yes, if we look at where the target was, right, let's also check what was the target on this one. But yes, different people, different trading style, different personality style. Some people might be happy exiting at 2:1. Some people might be looking for the targets. So if you look at the target, you can see when the prices came into the zone, our nearest opposing fresh zone is somewhere around here, which is showing us 1:1, 2:1, 3:1, 4:1, approximately a 6:1, right? So the target on this trade setup is a 6:1, and at 1:1 we can make it as a break-even trade. So yes, if you wanted to make it as a break-even trade, you did have the opportunity for it. And you can also see we also have a formation of a new demand area, which is this rally-based rally. Now generally what happens is after violation of an opposing zone, we should be trailing, but let's assume that if you are a little aggressive with your trailing and you say, okay, a new demand zone has formed, let me revise my stop loss just below this, because now what is going to happen if the prices they move down, I still make a small little profit, right? Otherwise, if it continues to my target, I'll keep trailing it for my target. So yes, the worst case scenario now is you can get a small profit on this. Best case scenario is you can keep trailing onto it unless and until we get an exit on this. So that's your example from session number 5. And again, you can see after the move, we are not doing the analysis. The analysis was done even before the move happened. And yes, the recording is available for session number 5. If you wish to watch that recording, you can always go back and see the recordings. All right, so that takes care of the trades which were getting carried forward and the trade which got triggered during the week. And now that we are done with the review, let's get started with our analysis for today. So just give me a minute. Let me bring up the chart. So this is the symbol which we will be analyzing today. So again, when it comes to trading, I always say trading has to be a very mechanical and rule-based process. Now, why it should be mechanical and rule-based, I have explained this in a video. The title of that video is How to Start Trading. Now, in case you have still not watched that video, the link should be available in the description. Otherwise, if you'll just do a search on my YouTube channel, How to Start Trading, you should be able to identify that video. And it's a very important video because it guides you how you should start as a trader when it comes to trading these markets. And again, because trading has to be mechanical and rule based, the video focuses on the importance of why it has to be mechanical and rule based. And the process that I've explained in that video, you might have to go through that process maybe twice, maybe thrice. But once you have done that process maybe 2-3 times, by default, you will start seeing that you will start becoming more of a rule-based trader and less of an emotion-based trader. Now, because you need to be a rule-based trader, what you need to do is you need to create something which is called as a trade plan. Now, the problem is when you start trading or when you start trading a new methodology, it's not easy to create a trade plan from day one. Why? Because to create a trade plan, you first need to have a good enough understanding of that process or that methodology. And once you have a good enough understanding or experience of that methodology, then yes, maybe you can convert it into a step-by-step process. So to overcome this challenge, what I've done is I have created a trade plan for you, which is a combination of these two documents, the rule book. Again, I'll add this rule book is basically a conservative approach, because whenever you're learning something new, it makes sense to start a little conservative. But as you start gaining more and more experience, you start building up confidence in your analysis. If you want to make some modifications to this rule book to make it better in sync with your personality style, because different traders can have different personality styles. Some people are aggressive, some people are conservative. So yes, those modifications can be done, but at least you do have a starting point. And we also have this other document, which is called as the trade plan steps. You can also call it as the walkthrough or the flow chart. So this guides us what we need to do as a demand and supply trader step by step. And for every step, we have some rules which are available in the rule book. So what is my step number 1 whenever we start planning our trade? Step 1 is to define our trade purpose. Now, the question is, what do we mean by trade purpose? Trade purpose basically implies the expected duration of the trade. And the duration of the trade is from the time you enter the trade to the time you exit the trade. Now, when I'm talking about the exit here, the exit can be the target, the exit can be break even, the exit can be the trailing stop loss, the exit can also be the stop loss, any kind of exit. So this is what you need to do first. You need to define your trade purpose. And why? Because when we do our analysis, the charts that we use, they are time-based charts, and we have a number of time frames available to us. So the very first challenge we face is that there are so many time frames available. So out of these a number of time frames, which time frame should I be using for my analysis? That's the very first challenge. And to overcome this challenge, we do not start by randomly selecting any time frame. We again go with a very logical approach. And that logical approach is that the longer I want to be in a trade, the bigger the time frame I should be using for my analysis. And similarly, the smaller I want the duration of the trade, the smaller the time frame I should be using for my analysis. So what I've done is I have divided these trades into 4 different purposes, and we call them as the hourly income, daily income, weekly income, and monthly income. Hourly income implies a trade where my expectation is that this trade can last for an hour or few hours. Daily income, a trade which can last for a day or few days. Weekly income, a trade which can last for a week or few weeks. And monthly income, a trade which can last for a month or few months. Now, very important, by definition, I said daily income is a trade which can last for a day or few days. But when you're trading markets which are not 24-hour markets, let's take example of NSE India, which is not a 24-hour markets. So those of you who are trading markets which are not 24 hours, I'm pretty sure you people would have experienced that whenever the market opens, some symbols they gap up and some symbols they gap down. Now, because of this gap up, gap down, what can happen is if you get a gap in your favor, you might get profit which is bigger than what you were expecting on that trade. But if you get a gap against you, you can also lose more than what you were willing to lose on that trade. So we understand that whenever we hold a position overnight, by holding a position overnight, we are taking that unnecessary overnight gap risk, which cannot be avoided. So that is why my recommendation to all of you is that initially your hourlies and dailies will be strictly intraday trades if you're trading markets which are not 24-hour markets. And when it comes to weekly monthlies, you have no choice. You'll have to keep these positions as overnight positions because we're not anticipating to get the exit the same day. So these positions have to be kept as overnight, but that does not mean that for weekly monthlies, we cannot have a gap against us. It can happen, but since you're leaning against some bigger time frames, the probability definitely reduces. But as you start having more and more experience, you start building more confidence. If you want to include daily income into overnight trades, that can definitely be done. So my step 1 is I need to define my trade purpose, and let's assume I opted. I want to plan monthly income trades. Now, once I have selected my purpose of trade, what is going to happen? From the rule book, I'll get to know what time frames I should be using. So if I go to page number 28 on the rule book, we start with the topic, which is multiple time frame analysis, because demand supply methodology is not based on single time frame. In demand supply methodology, we use multiple time frame analysis. So what are the multiple time frames that we use? We use a minimum of 4 different time frames, and we call them as the higher time frame HTF, intermediate time frame ITF, lower time frame LTF, and the refining time frame RTF. Higher time frame is used for demand supply curve analysis. Intermediate is used for trend analysis. On the lower time frame, we identify our areas of demand and supply for our entries and exits. And the refining time frame can be used for multiple purposes like fine-tuning the zone, different kind of entries like your type 2 type 3 entries, or in case we need to apply some additional rules, that is also where this time frame can help us. Next, what are the 4 different purposes of trades? So we have already talked about it. What is HIT, DIT, WIT, and MIT? So now the question comes that for every purpose of trade, what will be my 4 different time frames? And we get the answer from this table. Now mind it, this table, which is on page number 31, is specifically for the NSE market because this market is only open for 6 hours and 15 minutes. But if you're trading markets which are open for longer durations, like you have your commodities, forex, cryptos, maybe some international markets, then you can look at the table which is on page number 32. But since I will be taking examples from the NSE, I will be following this table. Now, based off this table, because I opted, I want to plan monthly income trades. Now I have the clarity that as a monthly income trader, my time frames will be monthly, weekly, daily, and 60. Monthly is the higher time frame, which is used for curve analysis. Weekly is the intermediate, used for trend analysis. Lower time frame is daily. That is where we get our SETS from. SETS stands for stop loss, entry target, and size. And in case we need to use the refining time frame, then my refining time frame will be the 60 minutes chart. So as soon as I'm done with my step number 1, now I have the clarity to what time frames I'll be using and what is going to be the purpose of each and every time frame. So my challenge number 1 is taken care. Now the next challenge is, yes, I do know my time frames, but if I again take example of NSE, on NSE we have over 2000 companies listed. So it's not humanly possible that every day I sit and analyze 2000 companies. So what I need to do now is I need to have a process in place which can help me get a smaller list out of these 2000 companies. And how do we do that? For this, we use certain computer programs which are called as scanners or screeners. So the way these scanner screeners, they basically work is that we input certain conditions into them, that these are the conditions I'm looking for. And then these scanner screeners, they identify that out of these X number of symbols, which symbols are matching with those conditions. Whatever is matching with those conditions, it gets shortlisted for us, and that is how we get a smaller list. Now, if you'll do a Google search, you'll be able to find n number of scanner screeners which are based on either conventional technical analysis or fundamental analysis, and that can help you shortlist some symbols. But the challenge was that there were no scanners based on demand supply trading methodology. So that is where I have created two custom built tools, and these two tools are purely based on demand and supply. I'll briefly explain you what these tools they do, but if you want to understand them more in depth, you can watch the walkthrough videos which are available on our website. So how can you do that? Very simple. Once you visit our website, under services, you'll go to trading view indicators, and here you can see we have alerts and screeners. So just click on the subscribe now button. It will take you to the product page, and that is where the walkthrough videos are available. But let me briefly explain you how these two tools they basically work. So let's start with the first one, which is alerts. Now, what you need to remember is that alerts only work during the live market. If the markets are closed, the alerts will not get generated. So for the alerts to work, the market has to be live. And since the crypto market is live as of now, I'll take example from the crypto market. So you can see I've applied the alerts. I'm on the 5 minutes chart. And what I've done is I've given a list of about 20 symbols. So what alert will do now is that on this 5-minute chart, it will constantly keep monitoring these 20 symbols. And as soon as a demand zone or a supply zone forms during the live market, it will notify you. Now, how it will notify? If you have a free account on TradingView, definitely you cannot place alerts. So on a free account, you will only get this notification as a table. Like you can see, we have this table on the chart, and it keeps updating on whichever time frame you will be on. So if you're on a 5 minutes chart, it updates every 5 minutes. If you're on 15 minutes chart, it will update every 15 minutes to always let you know that during the live market where these zones are getting formed. Now, if you have a paid account, you can always place your alerts as well, and that is how you will get your alerts. So whatever settings you have kept for the alerts, whether you want this toast notification, whether you want it on your email, you want it on your app, that is how you'll get your notifications. But it will be the same information which we have on the table. So now, just as an example, if I go to the first one, which is ETH USDT, you will see that crypto, we have a rally based drop structure. So can you see yep, so this was the rally based drop, and as soon as that rally based drop was formed, we would have got this notification. You can see the notification was 1953.84, so that's 1953.84, and 1963.23, so that was your supply. Similarly, if I take another example, let's take XPR USDT. XPR USDT, sorry, XRP USDT. So here again, we have a rally based drop. You can see when this rally based drop was formed, we would have got the notification for it. Yes, currently the prices are reacting from it. We'll talk about it, as we move further ahead in the session. But this is how alerts, they basically work, that during the live market, as in when you have formation of these demand and supply areas, it keeps updating you, it keeps notifying you based on whether you have a free account or whether you have a paid account on TradingView. All right, so that's your alerts. Now talking about screener. Now, how does this screener works? Now, first thing, for the screener to work, it is not mandatory that the market has to be live. The market can be live, the market can be closed. And what happens here is you again provide your list of symbols. Now in alerts, you can give a list of up to 20 symbols, but in screener, you can only give a list of about 15 symbols. So now once you have given your list of symbols, but again, you're not restricted only to 15, because you can always change the list, or you can apply the screener multiple times on a single chart, or you can apply it multiple times on multiple charts. So definitely you can have a bigger list. But after giving your list of symbols, you'll also have to define your proximity setting. So here you can see I've given my proximity as 2%. So what I'm telling the screener is that out of these 15 symbols, on whichever symbol the current candle is within 2% to a demand zone or a supply zone, shortlist for me. So again, if you think about it, if I was manually going through these symbols, at the end of the day, I would have to analyze 15 symbols. But now it is telling me Bharti Airtel is closer to supply, ITC is closer to demand. So if you want to do your analysis, you can only do the analysis on these two symbols. So I have saved my time of analyzing the other 13 symbols, because I know in those symbols will not be closer to demand or supply. So why should I waste my time analyzing those symbols? These are the only two symbols where I'll be closer to demand or a supply area. So example, if I go to ITC, you will see that on ITC, the current candle is close to a demand area. That is why it was shortlisted for me. If I go to Bharti Airtel, I will be closer to a supply area, and that is why it was shortlisted for me. So this is how the screener works. So again, screener will help you identify symbols where the current candle is getting closer to a demand area or a supply area, and alerts will help you shortlist symbols where we have formation of demand areas or supply areas during the live market. And just as an example, can you see this is based on daily? If I go to the weekly, now it will give me the results based on the weekly. So can you see based on the weekly, I'm not closer on any of these symbols to a demand area or a supply area. So what I can do is I can say, okay, instead of 2%, find if I'm closer, let's say within 5%. So let's see, do we get anything from 5%? So can you see even on 5% we don't have anything. So can you see, instead of wasting my time analyzing these 15 symbols, in just few seconds I got to know whether I should be wasting my time on those symbols or these are the only symbols I should be looking at. So that's your alerts and screener. So now that you have seen the examples of this, we can start with our analysis for today. And yes, you've already seen the example of even a live alert which was generated just some time back. All right, so let's get back to our analysis. Excuse me. So step 2 was to get a smaller list. Now, how you get this smaller list is completely your choice. There are a number of free scanner screeners available on the internet. If you'll do a Google search, if you want to use those free scanner screeners, you can do that. If you want scanner screeners which are purely based on demand and supply, then we have two of these custom built tools which are purely based on demand and supply. Process can be as simple as I need a smaller list, so maybe I'll just analyze my Nifty 50 symbols, or I have my own favorite list of symbols which I want to analyze every day. So choice is yours how you want to get that small list. Just give me a second. Right, so choice is yours how you create your small list. But once you have that list, always remember whatever results you get from these scanners or screeners, you can never blindly buy or sell these symbols. So the screeners, they never tell you what you need to buy or sell. All they are doing is they're helping you get a smaller list out of a very big list. Once that small list has been identified for you, what you need to do is you need to analyze them manually one by one and see which one matches with your trade plan. The one which will match with your trade plan can be an opportunity for you. Just give me a second again. And the one which does not match with your trade plan, you simply skip it, right? So that is how you get your symbols. So let's assume the very first one was ABC. So what am I supposed to do next? On ABC, I need to go to the lower time frame. So the question is, what is my lower time frame? We got the answer from step number 1. That as a monthly income trader, my time frames were monthly, weekly, daily, and 60, out of which daily was my lower time frame. And on lower time frame, I need to identify. So now this is again a challenge in itself, because when you start learning demand supply trading methodology, or even if you have been doing demand supply for a while, identifying quality zones is a challenge. And even if your eyes are now trained to identify these quality zones, it can also be very time consuming. So to overcome this challenge, we have also created a custom built tool on TradingView, which is called as the demand supply zone indicator. And what this indicator basically does is that once you apply it to your chart, it automatically identifies your areas of demand and supply. Like here you can see, it is automatically identifying the demand and supply areas for us. And what we also do is we offer a 100% free 7-day trial of this indicator. So if you've still not taken the trial, how you can do that is you can visit our website. Now, once you're on our website, under services, go to TradingView indicators. And here you can see the very first one is demand supply zone indicator. Click on it and you'll be able to find the 7-day free trial. In fact, the direct link should also be in the description. Now, you just need to fill this form, which will take you less than 30 seconds. You have to provide your full name. After that, you have to provide your TradingView username. Now, in case you don't have a TradingView account, you can click here and create a free TradingView account, because the indicator works on a free account as well. Now, if you already have a TradingView account, you can click here, visit your TradingView profile, identify your TradingView username, input your TradingView username here. Now, very, very important, when you're inputting your TradingView username, make sure you double check and input your correct TradingView username, because if you make a mistake, the indicator will not get activated for you. It will get activated for the person to whom that username belongs, right? So always ensure you double check your TradingView username before you fill the form. And then your email address, you will also get to know on which date your trial will expire. How did you hear about us? You can choose the relevant option. and then click on I'm not a robot. You can go through the legal disclaimer, terms and conditions, and privacy policy. If you agree to them, click on I have read and agree to this, and then click on finish and start my free trial. Now, once you fill this form, within 24 hours, the indicator will get activated for you. And once it gets activated, you will receive a notification on TradingView itself that the indicator is now active, and then you can enjoy it free for 7 days until it reaches the expiry date. Now, because everyone has that opportunity, that you can use the indicator for free for 7 days, all the analysis we'll be doing will be purely based on the indicator, and that will help you understand that how beautifully the indicator helps us to plan trades very mechanically and rule based, and also saves a lot of time. So as soon as, like I said, I applied the indicator, you can see it is identifying all the demand and supply areas. Since the symbol is making all-time highs, we don't have any supplies, but we do have a demand area, which is this rally-based rally. So let's mark this rally-based rally demand zone. So my step number 3, which was identify the zone, has already been done by the indicator automatically for me. So do we have a zone available? The answer is yes, we do have a zone available. Now, once you have a zone does not mean you can blindly trade it. Once the zone has been identified, the next step is to qualify it, which is a 2-step process. In step 1, we'll qualify based on certain conditions, and in step 2, we'll qualify based on the booster scoring. So let's start with these conditions first. The very first condition is level on top of level. Now, how do we verify that whether a zone is a case of level on top of level or not? Very simple logic. If you have an intermediate time frame zone and the same intermediate time frame zone divides into multiple zones on the lower time frame. So again, when your intermediate time frame zone divides into multiple zones on the lower time frame, we call it as a case of level on top of level. So what we understand from here is that to be a case of level on top of level, my lower time frame zone has to be inside the intermediate, which we call as a coinciding level. So if you have a coinciding level, there is a possibility that it might be a case of level on top of level. But if you don't have a coinciding level, it can never be a case of level on top of level. So let's verify that the zone that I have identified, does it coincide? Again, you can see, some zones would have formed and I immediately got the alert for it. So let's skip it for now. So like I was saying, let's verify that the zone we have identified, does it coincide with any intermediate time frame zone? And the answer is no. You can see our lower time frame zone is right here, intermediate is here, and intermediate is here. So we don't have any intermediate zone wherever my lower time frame zone is. So it is not a coinciding level. So if it is not a coinciding level, it cannot be a case of level on top of level. So my very first condition, level on top of level, is not applicable. Now this zone is not because of a gap, therefore will not apply the gap rules. Talking about pivot and non-authenticity, we only apply to a drop-based rally or a rally-based drop. So this is also not applicable. And talking about unstable equilibrium, again, not a case of unstable equilibrium, because for unstable equilibrium, the leg out has to go below the basing, which is not happening in this case. So none of these conditions are getting applied. So if these conditions are not getting applied, they cannot disqualify the zone, right? To disqualify the zone, first they need to be applicable. Then there can be two possibilities, either qualified or disqualified. But if it is not getting applied, by default, is the zone qualified for us? The answer is yes. So now that we know we have a qualified zone, the next step is to apply the boosters. So let's start applying the boosters to this. And before we do that, let me also draw my entry, stop loss, and back to the entry. So starting with the first one, which is freshness. Is this a fresh zone? The answer is yes, gets a score of 3. Strength, we have an explosive move. That is the reason the indicator is identifying for us, gets a score of 2. Time at the zone, we have 3 candles in the basing, again gets a score of 2. Reward to risk ratio will take as an assumption, because based on the arrival, the reward to risk ratio can change. So before entering a trade, we will definitely re-verify how's the reward to risk ratio. If we have the required RR, only then we participate, otherwise we don't. Now talking about the location, you can see that we have a monthly zone and we are planning inside of that monthly zone. So I can definitely call it as the best location, gets a score of 2. Talking about the trend, since you will be at the best location, trend becomes irrelevant. Doesn't matter whether it is up, down, or sideways. In all the 3 cases, we will be giving it a score of 1. A move from the zone, we need at least a 3:1 move, because I'm planning for a 2:1. So you can see in fact we already have a move which is more than 5:1. Gets a score of 2 again. Talking about level on top of level, we have already verified, not a case of level on top of level, not even a coinciding level. And the last one is trap. Now trap in a way becomes irrelevant. The reason is because whether it is 0 or 1 doesn't make any difference. It is already a type 1 trade for us. But if I do take a horizontal line wherever my proximal is, and if I just start pushing it up a little bit, trying to identify an area where the prices have been bouncing over and over again, you can see this area in the recent past has acted like support, here has acted like support, acted like resistance, and then I don't have anything in the past. So yes, we do have an area which can work like an area of support and resistance. So what will happen is people who believe in support and resistance, this is where they will be inclined to buy, and their stop losses will be placed below this, and those stop losses will be sell orders. And similarly, if we get a breakout, people who believe in breakout will also start selling. So by the time we enter this area of demand, we know we'll have a lot of selling coming into the market, and these people are now making two novice mistakes. Mistake number one, they are selling after a decline in price, which means they are selling at a cheaper price. Mistake number two, they are also selling in an area where the chart has proven to us that back in history, demand was more than supply, which could be the only reason for the prices to move up. So yes, that possibility is there that this might work like an area of trap, for which I will give it a score of 1. So if you look at the overall scoring, we have a score of 10 out of 10, definitely with the assumption of reward to risk ratio when it comes to the quality, and 6 out of 8 when it comes to probability, which makes it as a high quality, high probability trade setup, and high quality, high probability can be done as a type 1 trade. So coming back, after applying the boosters, yes, we got to know that this is going to be a type 1 trade for us. Now, no matter how high the quality or the probability, what you need to understand is that any trade can be a stopped out trade, right? So we also need to be ready for the worst case scenario, for which we'll do our proper position size calculation, so that in case the trade does not go in our favor, it goes against us, we should not be losing more than what our risk management rule allows us to lose. Now, whenever the prices are back, we'll have to re-verify. The reason is the markets are not static, markets are dynamic, conditions are changing almost every other second. So before entering any trade, we need to re-verify that does it still qualify based on my trade plan. If the answer is yes, you place your order based on the entry type, in this case a type 1 trade, and once your order has been executed, the last step is your trade management, where what we do is 1:1, we make it as a break-even trade, and after that, if we get the opportunity to trail onto it, we start using our trailing stop loss. So this is how we plan trades, very mechanically and rule based, and if these sessions are helping you plan better trades, then do like the video. And if you are part of some trading group or trading community, I will highly recommend that you share the links to my courses, the links to these live sessions in your community, because I know a lot of people are struggling with trading, and because all these resources are 100% free resources, why not to share with other fellow traders so that more and more people can take advantage of it. Now, what I do is at the end of the session, I take your questions, queries, but before I start taking questions, I will also touch upon one more important point. A feedback which we used to get from you people was that, yes, I do take your questions, queries at the end of the session, but what if I don't want to ask my questions publicly? Then what you can do is, once you visit our website, you can see on the top right corner, we have this option for one-to-one, and it's not just asking the questions publicly. Another reason can be, what if I want to share my charts and I want to show something on the chart regarding which I have a question query. So what we have done now is we have this option for one-to-one appointment, where if you feel that you want to have a personalized time where you want to ask your questions, queries, you can schedule an appointment. Now, there are two kind of appointments available. The first one is a voice call. So if you feel on a voice call you can ask your questions and get the answers to it, you can go for a voice call. Second, if you feel that you want to share your screen or maybe show something on the chart, for which an online meeting is required, you can also take an appointment for an online meeting, right? So these two options are definitely available. But now, if you are okay with sharing your questions, queries during the YouTube live session, you can always put it in the chat box, and I try to answer all the questions that we get in the chat box before we end the session. So let's see, what do we have in the session? The AI agents are getting so much better. If we give the strategy and indicator to an AI agent, won't we have more opportunity and quality entries at scale? See, again, when it comes to trading, one thing which I always say is that trading is not just about mathematics or let's say some patterns on the chart. Yes, even though we are doing that, along with that, we also require something which is called as experience, right? And these AI agents, I think they'll never be able to match that human experience. So that is where I believe that when it comes to trading, yes, you can have a basic trading model, but somebody has to be there to monitor it, or maybe to give the last green signal, okay, that even if you have done this analysis, go ahead and take that trade for us. And that is what my tools are already doing, right? So in a way, they are helping you find the opportunities where you are closer to the demand and supply areas. They are helping you identify the zones where we want to participate. So we are already doing almost the heavy lifting using these indicators. Almost 90-95% of work is done by them. Only that 5%, whether we want to take that trade or not, based on our experience, that all boils down to us, and based on that, you just have to place your orders. But yes, can be done. But again, I'll say, as a black box, I don't think it will be very, very easy to do that, because like I said, the human experience element is required, which is missing with the AIs. All right, perfect. So that's the only question we had for today's session, and that brings us to the end of today's session. Thank you everyone for joining in. I will be seeing you next weekend most probably. And again, sorry for the last weekend. There were some reasons because of which I was not able to do the session. So the same would have happened this weekend, but I thought, why not to take the session on Friday? So again, thank you everyone for joining in. I'll see you next weekend. Till then, trade safe, enjoy your weekend. Take care. Bye-bye.